Ladies and gentlemen, good day and welcome to the Q1FY27 conference call of Fairchem Organics Ltd, hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of Fairchem Organics Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of the financial year 2027. Before we begin, a quick cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. I would now like to introduce you to the management team joining us on today's call. We have with us Mr. Naush Sariwala, Managing Director and Chairman, and Mr. Bhavesh Shah, Chief Financial Officer. Without any delay, I would like to hand over the call to Mr. Bhavesh Shah to begin with the financial highlights. Thank you, and over to you, sir.
Thanks and good afternoon, everyone. Welcome to the earnings call for Q1FY27 for the quarter under review. The revenue from operations was at 176 crore, reflecting a 34.4% year-on-year increase compared to the corresponding quarter last year. EBITDA for the quarter was 18 crores with an EBITDA margin of 10.14%. The net profit for the quarter was rupees 10 crores. We have processed 12,400 tons of raw material and has sold 13,500 tons during the quarter. Happy to answer any queries. With this, I'll hand over the call to our Managing Director, Mr. Naush Sariwala.
Thank you, Bhavesh. Good evening, everyone. As we begin FY27, I want to share our operational perspective on quarter and the road ahead. The quarter has started on a strong note. Our revenues from operations have grown. Basically, they have been driven primarily by higher price realization on account of elevated raw material costs as well as lower imports amid ongoing supply chain constraints. I am pleased to note that our EBITDA margins have also further improved to more than 10% during the quarter, supported by better realization in domestic market as import pressure continues to ease. On the external environment, while we remain watchful of the evolving macroeconomic situation, including the uncertainty arising out of ongoing Middle East crisis, we continue to be consciously optimistic about the trajectory ahead. The recently concluded India-UK Free Trade Agreement and the expected implementation of India-EU Free Trade Agreement, favorable tariff developments with US, and recent depreciation of Indian rupee are expected to strengthen our export competitiveness and support improved capacity utilization over the course of the year. With that, I open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Shlok Patel from Zenflow Research. Please go ahead.
Hi. Thanks for the opportunity. Just a couple of questions. Can you share the revenue mix for Q1 FY27?
Hello.
Hi. Am I audible?
Yes, you are audible.
Yeah.
Yes,
please continue.
the revenue was 176 crore, of which around 30% was dimer acid, 42% was linoleic acid, isosteric acid was 4%, and rest 24% is other byproducts.
Okay. And can we expect similar revenue and margin run rate for rest of the 3 quarters?
Yes.
Looking at the current situation, we feel we'll be able to maintain.
Yeah. And just about the isosteric acid ramp up, how are we expecting the ramp up for isosteric acid for next 1 to 2 years?
I mean, in next 1 to 2 years, we'll reach more than 80% capacity utilization.
Yeah. Okay. Thanks. That's it from my side. Thanks.
Thank you. The next question is from the line of Shivam Gupta from Trinetra Asset Managers. Please go ahead.
I want to know, like, company has historically benefited from its integrated sourcing model. Beyond raw material prices, are there any structure initiative underway that can further strengthen your cost advantage over global peers?
Last year, we had undertaken major energy conservation exercise, whereby we have been able to reduce our power consumption by more than 30% and our solid fuel consumption also by more than 35%. So that is one major exercise we have undertaken. We continuously do time and motion study so that no excess manpower is created in the organization, and at the same time now we have started working on the catalyst and the consumables what we have been using, trying to stabilize, work with different types of catalysts whereby the consumption and the value both goes down.
Okay, sir. And my second question is, as global customers increasingly look to diversify their supply chains,
yes,
are you witnessing any meaningful increase in inquiry for customers seeking alternative to existing supplies?
Yes, in fairly large number.
Can you tell numbers?
It's around 7 to 8 big customers.
Okay, sir. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Sajal Kapoor from Anti-Fragile Thinking. Please go ahead.
Yeah, hi. Thank you for taking my questions. Sir, I would like to start with our gross margins. If you look at the business over the last 5 years, our gross margins were low to begin with, and they've only gone lower from that reference point, which kind of means that the product innovation and R&D has had almost no impact, or maybe we are not interested in innovating and moving up the value chain, because that should have reflected in the gross margins.
It's not the case, because we introduced isosteric acid. We are the third company in the world making isosteric acid, and we have followed the green route. So that is one thing. Secondly, we have commissioned the bypass fat plant also, which again, there are very few companies making bypass fat. So it's not that we are not doing innovation. Basic problem has been, we have been always explaining that the duty structure on the raw material what we buy is 22.5%, and the finished product carries 7.5% duty. That is the basic reason.
Okay, so and in the presentation, we are saying that we have got 13 technical or scientific resources, 1 PhD. How much revenue on a recurring basis do we invest in R&D every year? Is it 1%, 2% of sales, that kind of a number, or?
It's around 40, 50 lakhs is only spent on the revenue side. The salary and the capital expenditure is on need-based basis.
So it is 1.5% as of now.
1.5% as of now, right? I think we should quote that number in the annual report, because I was looking at the latest annual report. I couldn't find the number clearly. Maybe something we can take as a feedback and implement from next year, because this year's annual report is already up.
R&D expense is already mentioned. If you can just check the annual report, we'll just let you know the page.
I checked them. It's showing blank as so both capital and recurring is showing blank. I had a look.
We'll just get back to you on this.
Sure. No problem. And finally, what percentage of current revenues are coming from products that did not exist 3 years ago or 4 years ago? And where do you expect the product mix to shift over the next 3 to 4 years?
Basically, with the introduction of isosteric acid, we intend to increase the utilization of dimer fatty acid plant, which in turn will increase the overall utilization of plant capacity. So that has been the isosteric acid we introduced 2 years back, and basically as it is going in cosmetics, plus there are entry barriers which has taken a little bit longer for us to get the approvals from the buyers.
Right. And do we expect to introduce more products that kind of fit our philosophy of waste to wealth over the next
quarter? We'll be introducing one new raw material. Again, for the first time, we'll be manufacturing that particular product. And it also falls in oleochemical sector only, which is the process has been developed by our in-house R&D lab.
Sure. And in terms of the innovation cycle from concept to commercial, what is the kind of the delay? Does it take 3 years, 5 years, 7 years?
R&D is something which takes pretty long, and in which time span is not fixed. Then we go for pilot plant, then we go for one small plant, and then we go for the larger plant. Basically, none of these technologies are available off the shelf. All these technologies are to be self-developed. So rather than taking any undue risk, we try to move slowly.
Sure. So in terms of the competitive advantage in manufacturing, is it the manufacturing know-how rather than the patent? Because I don't think we file patents.
Manufacturing
Many chemical companies don't file.
No, it's manufacturing know-how.
Yeah, but we refrain from filing patents. So I know Clean Science as an example. It's a very different organization, but they also don't file any patents.
Yeah.
Patents are very difficult to defend. Okay. I mean, rather, we are the preferred choice to our customer. That is what we prefer.
Sure. Understood. Thank you so much for answering all my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Preet Jain from Niveshaay. Please go ahead.
Hello. Yes.
Good afternoon, sir.
Sorry to interrupt. Mr. Preet, may we request you use a microphone to ask a question?
I have used microphone.
Mr. Preet, we are not able to hear you well.
Hello?
Yeah, please go ahead.
Basically, I want to know that who are our dimer acid customers, or is there any dimer acid, how is the competitive environment scenario ramping up? And I want to know basically on the market side, what basically in terms of tonnage, how big is our market of dimer acid?
So if these are certain information we won't like to share. That is the name of our customer and what is the quantity we are selling. So it won't be possible for me to share those information.
Okay, and I also want to ask that is there any alternative to the raw material we are using, like from we are using the feed oil from Marico or other players? Is there any alternative of that raw material for our dimer acid?
No, basically dimer acid is made from vegetable oil sources, and we are utilizing vegetable oil sources only. The second option is to follow mutton tallow route, which is something which we are not doing.
Okay, and also on the new product which we are coming on, which will be commissioned from Q2, the product which is used in EV battery side, how is the ramp up of that product expected?
We are not going to manufacture anything for EV battery. We have never said that.
Okay.
There might be some confusion at your end.
Okay. But the new capacity which is coming from Q2 of 40,000 metric ton, it is of dimer acid and that another product.
Other product.
No, it's another product. It's in the family of oleochemical.
Okay. And how is the ramp up of that product expected?
We are going to start the trial run. So once
Okay.
that is stabilized, then we'll ramp up the capacity.
And margins of that plant will be same as our current.
Better than current.
Should be better.
Okay. Got it. Thank you.
Thank you.
Thank you. The next question is from the line of Chirag Bekaria from Budrani Finance. Please go ahead.
Good afternoon, sir. I wanted to understand, sir, in your PPT, page 14, you have written the revenue has improved because of higher price realization due to high raw material costs. So does that mean that higher raw material cost you were able to pass on to the consumer?
Yes. Sure.
So incrementally, sir, earlier you used to mention, that it was tough to pass on. So how come, it is possible now?
There was a geopolitical supply chain issues because of Middle East crisis. And we have seen that the imports have also reduced. So that's the reason we could pass on the price increase.
So, sir, if things were to, say, this supply chain constraint that you have mentioned, if those were to ease, again the same problem would surface, or you think?
So, sir, basically there was dumping happening from China, which has gone down. And if dumping starts again, we cannot do anything about it.
So, sir, second question was that in terms of margin, which you posted around 10% this time, that is again dependent on the fact that the import does not come in and
Obviously, in any chemical sector, if China starts dumping, why the companies go for anti-dumping duties? So dumping is happening, then no one can do anything about it.
Okay. Thank you, sir.
Thank you. The next question is from the line of Madhur Rathi from Countercyclic Investment. Please go ahead.
Sir, thank you for the opportunity. Sir, firstly, I wanted to understand that this 30% volume growth that we have shown quarter on quarter, is this sustainable, and for what percentage of our products are direct crude substitutes in our major paint industry, if you could help us understand?
So the linoleic acid, which is 40% of our volume, that goes into the paint industry.
And so this is a direct crude substitute, crude derivative substitute. So either they use linoleic acid or they use some kind of crude substitute. Is that understanding correct?
Yes.
Sir, so do we see a scenario where a major portion of our volumes going away whenever crude comes down?
Not that crude, it's crude vegetable oil.
Okay, crude vegetable oil. Okay, got it.
Crude vegetable will reduce, our cost will also reduce.
Got it. And sir, this pricing improvement that we've seen, sir, do we expect this to sustain going forward? Has there been a meaningful impact of the Chinese anti-involution on our business?
Yes, Chinese dumping has gone down. Devaluation has happened. So all these things combined effect is the margins have improved.
Got it. Now, sir, coming out to our investor that we've mentioned that we are in some product upgradation of linoleic acid used in oil field drilling. So is this a product that is widely used, or this is something like very application specific product like one of the largest here, Oleon does, where they have specific products for specific applications? So if you could help us understand what is it?
It's a combination of both.
So have customer trials begun for this product?
Yes, they are trying.
Okay, and so if you could help us understand what would be the realization multiple we would get versus a normal linoleic acid, and what kind of...
Obviously, it will be better than that. Anything, when you make a special product, a tailor-made product, obviously your price realization goes up.
Right, sir, but if you could help us understand the magnitude of the...
it's something once we actually enter in contract, we will be able to realize.
Okay, got it. So just finally, one question from my sir, how do you see the business growing over the next 2 to 3 years? are we planning to move into more like oleon and fine organics, where we are manufacturing application-specific products, or we would like to make products that are difficult to manufacture by someone else, like
Difficult to manufacture.
Okay. And sir, the oleochemical that you mentioned, in what industry does it go exactly, the 40,000 metric ton that we've assigned for?
Yeah, come again. We were not able to hear you well.
So the oleochemicals that you mentioned that we have assigned the 40,000 metric ton of capacity for, in what product are you expecting?
At this stage, we won't divulge. Before also, I think you are, last time also you did ask this question, if my memory is right.
Yes, sir.
Yes, I said no. I won't be able to answer that.
Okay, sir. So that was from my end, sir. Thank you so much for doing the buyback.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Ashish Upganlawar from InvestQ PMS. Please go ahead.
Yeah, sir, thank you for this opportunity. So I've been following your company for the last 5 years, and this is, I think, first time that we've seen things improve, because I think last time when you expanded capacity, things went south because of dumping. So, sir, questions would be like, you mentioned that two factors. One is there is an inverted duty structure because of which margins are impacted, and secondly, the dumping that was happening. So, is it possible to segregate how much of the margins have been sacrificed because of each of these? Because I think inverted duty would be eating into something, and then the remainder is because of the realization.
Yeah, the finished product is charged at 7.5% and the raw material is charged at 16.5%. So differential 9% is the margin getting lost in this whole process.
So when did this come into effect, sir, this inverted duty structure?
This came in 2024 with at 27.5%. Then it got reduced to 16.5%.
So is there any chance of this getting corrected? Any representations, or you see any hope on that? Or
how can it something which we are too small fry to all these things?
Because it is, mainly used for we are having a byproduct.
We are too small a fry to understand this duty thing.
Okay. Secondly, sir, you mentioned that the dumping has reduced. Is it because imports were not able to come in because of this war stuff?
Basically, I think they might have realized that too much of dumping is happening. So maybe. So
some incentives being reduced in China or something.
Yeah, or maybe the export incentive what they were getting might have come down. Something would have happened, because we see the same thing in lots of products.
Okay, so I'm just trying to understand whether this is a sustainable thing, gain for us, or is it not?
It will be something which is happening in China. See what type of thought process going on there. So I might say that yes, this is sustainable, and it might not, and it might remain sustainable also. That's something. This is a business risk. So that is one of the reasons we are not doing any crazy expansion, or we are not taking any debt or anything. Whenever the things were good also, we were not doing that.
Okay. On the isosteric acid...
Sorry to interrupt.
Just what...
Mr. Ashish, may we request you to return to the question queue for a follow-up question?
Okay. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, good afternoon. Am I audible?
Yes.
Yeah, hello. So if you could mention what sort of volumes did we sell in Q1FY26? I just wanted to gauge the YOY volume growth that we had for this year.
So in Q1FY26 we sold 13,000 tons.
13,000 tons. So most of our growth this quarter has led through the realization I'm assuming.
Sure. Yeah.
And you mentioned that two things help. One is the China dumping gone down, and the second is because of the supply constraints happening. So we were able to pass on the cost. Just assuming that the supply constraints kind of lifts up, and now there's a normal supply happening, but the China dumping kind of stays stagnant. What sort of revenue growth are we targeting for the rest of the year? And
obviously, first thing we'll target is increasing capacity utilization.
Mm-hmm.
Minimum 10 to 20%. We intend to increase the capacity utilization. Every quarter maybe 5%. So by the end of the fourth quarter, we have increased it by around 20%. So that's our game plan. That is our strategy. We are working on that. Obviously, the geopolitical situation is going to play a big part in us.
Got it. And the reason for lower the lower volume growth in this quarter, can we base this off of lower imports happening in the country, or have we found any sources domestically to kind of get the raw materials?
We are 100% domestic raw material company. We don't import any of our raw materials.
Okay, so but the duty is on the raw materials from where we are sourcing, hence the gross margin.
Yes.
Got it. And on the esoteric side, what sort of contribution we had in this quarter, and how do you plan to scale it up over the next 2 years, since it has a better EBITDA margin?
Isosteric acid is going in cosmetics, and where the entry barriers are very stringent. It is taking little bit longer and longer than what we expected, because there are just 3 manufacturers in the world, and there are very few buyers of this particular product. So there is something called entry barriers which are happening. We are trying to enter, but it is taking its own time. The breakthrough, whenever if one also buyer comes in a big way, suddenly you will see a major surge in the quantity. So we are desperately working on it, but it's going to take its own time.
Got it. And lastly on the...
Sorry to interrupt. Ms. Shah, may we request you return to the question queue for a follow-up?
Yeah.
Thank you.
Thank you.
Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Rohan Joshi, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yes, you are.
Yeah. So my question was that what has the capacity utilization rate been this quarter, and what guidance can you give on the utilization rate for this FY27?
We are at close to around 60% as of now, and we'll exit the year. We'd like to exit the year at around 70 to 75%.
Okay. Got it, sir. So my second question was on the exports front. So, what is the current revenue contribution from the exports that we're getting right now? What products will be the key to achieving the company's export guidance that is given?
Dimer and isosteric acid.
Currently, it is hovering between 7 to 8%.
Okay, sir. And so, if I come on the domestic side, what proportion of revenue comes currently from the paint industry? Is the company dependent on that paint industry significantly?
40%.
40%. Okay, sir. And so can we expect the current growth outlook for the paint industry as well? What's the company plan to reduce the dependence over time? Because as you said, we have 40% of the revenue comes from there.
No, we don't intend to reduce our dependence.
At overall capacity utilization, we want to increase.
We want to increase the overall capacity.
So I think we don't have any issue with the proportion on paint industry.
Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Madhurati from Countercyclic Investment. Please go ahead.
So thank you for the opportunity once again. Sir, just a clarification, sir, this 70 to 75% utilization, this is on the 80,000 metric ton capacity that we are operating currently.
Yes, 80,000 tons.
And any additional would be once the 40,000 starts?
Yes.
Okay, got it. And sir, this isosteric acid ramp up, sir, how? Because we are expecting the plant to be 80% utilized in the next 2 years, but we are also seeing a longer gestation period from the end consumer. So how should we realistically look at this product for Fairchem Organics Ltd?
Isosteric acid is manufactured from one of the co-products of dimer fatty acid. So it has no bearing on whether I sell isosteric acid or not. Isosteric acid is a part of forward integration. So it gives me extra value, extra price realization on the byproduct stream. That's all. So it has no bearing whether I am able to sell higher quantity or lower quantity of isosteric acid. It has no bearing on overall capacity utilization.
So where does this monobasic acid is used apart from isosteric acid? Where is it used additionally?
Paint.
Okay, paint. Got it. Sir, okay, got it. So that was from and thank you, sir.
Thank you. The next question is from the line of Pragyam Ladha from Omni Management LLP. Please go ahead.
Thank you for the opportunity, sir. All my questions have been answered. Just one question. Sir, in percentage terms, if you could guide how have the realizations improved from Q4 of FY26 till now and also from Q1 of FY26?
The realization from Q4 has gone up by around 25% and from Q1 it has gone up by 30%.
By 30%. Okay, sir. Okay. 30%. And we see these sustainable for as long as this West Asia crisis is going on, right?
Yeah, we hope so.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Shivam Parekh from Value Wise Wealth Management. Please go ahead.
Hi, sir. Good afternoon. So around 2 quarters back in the conference call, you had mentioned that we were not willing to sell at the prices in which one of the domestic competitors was selling dimer acid and linoleic acid. So currently, as of today, so due to better price realization, are you comfortable now in selling at our max utilization capacity and due to better price realization as well as due to less tailwind as compared to around 2-3 quarters back?
Yeah, that's correct. From March onwards, our margins realizations have improved.
Okay. And sir, like you had mentioned that you were deliberately slowing down on sales, like you told that we would not like to sell at prices which we are not comfortable at. Due to that, we were at around 35 to 40% utilization capacity. And currently, you are at 60% and you tend to reach to 75%. So are we at that price realization level where you are still waiting for the better price realizations or are we expecting?
So we are happy with the realization.
We are happy with the realization. We'll continue to increase
That's the reason
the market share.
Capacity utilization.
Okay, so as of the current scenario, as the price realizations are better, so you are willing to ramp up at our max capacity. Is my assumption correct?
So first step is to reach 100% capacity utilization, then we'll ramp up the capacity.
Okay. And sir, with the new 40,000
Sorry to interrupt.
capacity...
Mr. Shivam, may we request you return to the question queue for a follow-up?
Okay, sure. Okay.
Thank you. The next question is from the line of Ashish Upganlabar from InvestQ PMS. Please go ahead.
Hello.
Yes.
Hello. Yeah, yes. Sir, so isosteric acid still would be a very small portion of our sales, right? I mean, we just started on that, is it?
Yeah, 4% in this quarter.
Okay, so whatever results have come this quarter, it is purely to do with things improving on dimer and linoleic and other acids.
Yeah, that's correct.
Base business. Okay. So any guidance or maybe clear picture that you can share with us, because you would have had a big approval cycle as far as isosteric acid is concerned.
Every quarter we get some query or some information that will take some more time for analysis. So it is, obviously as a company, we are desperately following up. Our marketing is breathing down everyone's neck. But beyond a point, we cannot do. See, the beauty is that only third manufacturer in the world, so it also would have its own entry barriers, because the products are used in cosmetics in Europe and Japan, which are very, very, very strict companies to deal with. So that is taking your own time. But once you enter, it's a long-term association with them. So that's fine with us. We don't mind.
Yeah. So, sir, what I was trying to understand is, given the challenges that we have had with the base business all these years, so this would be a good forward integration for us to look for a change of course in the business overall. Is that the thought process if these problems sustain?
It increases our sustainability.
Right. Because you've always had a good balance sheet. The problem has been on the dumping and other things that had come out. Yeah. Sure, sir. Okay. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Rohit from iThought PMS. Please go ahead. Sorry to interrupt, Mr. Rohit. We are not able to hear you well. Could you please use your microphone to ask a question?
Is it better now?
Yeah, please go ahead with your question.
Yeah, sir. Most of the questions have been answered, sir. Just on this isosteric acid. Just while you on this in this call, even that it's a long gestation period. So, in terms of, if I have to sort of put you to say, in terms of, let's say there are 5 steps to get to the final process and start supplying commercially. Where are we now in terms of like?
At couple of companies, we have to finish all 5 steps. At couple of companies, we are at the 4th step. But we are at everywhere we have crossed 3rd step.
Okay. So, is it fair to say, sir, that let's say by end of this financial year, FY27, there would be some positive outcome?
Yes.
Right. And if you can share some bits about that you were doing this via the green ministry and you're only the 3rd player. So in terms of your cost advantage, or maybe in terms of your pricing benefit that you can, maybe some, what gives you that edge versus the, what is your pitch to the existing customers that why should they try you? If you can, maybe whatever you can share. I know these are confidential things, so whatever you can share.
It's better. Let the results speak.
No, of course, sir. I understand. But I'm saying, is the route different, or is it the fact that something else is unique in the process that you follow? So that, that's
our process is different. Our process is different.
It's a complete integrated plant.
Yeah, we are following green process. That is our
USP.
And that is the reason it is taking a little bit longer for everyone to undertake stability tests.
Right. And last question.
Sorry to interrupt, Mr. Rohit. May we request you return to the question queue for a follow-up question? Thank you. The next question is from the line of Ajay Surya from Niveshaay. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, you are.
Also, sir, I just wanted to understand from you, so because in the past we have faced issues of dumping from China, and recently because of this war, geopolitical tensions, everything, things have again changed in our favor. So, sir, I wanted to understand, from our interaction with customers, are they now willing to enter into any long-term contract, or are they still preferring to maybe go?
I would like to enter in any long-term contract with so much volatility. It would be harakiri for me.
But sir, on volumes, maybe we can get into like any long-term contracts with the customers, like pricing can be a moving part, but then on volume front.
Not like that. I mean, no company would like to have whereby they'll commit on quantity, but they won't commit on the price.
Okay. And sir, like, wanted to understand on the current imports trend, like, what are we witnessing as of now in the current scenario? Like, are we seeing imports coming in, or like any quantum of that? If you can provide any.
Quantities are going down, prices are going up.
Okay. Got it. That's it from my side.
Thank you. The next question is from the line of Jasmine Surana from VT Capital. Please go ahead.
Good afternoon, sir. Sorry for making you repeat this. That you were giving, could you please repeat that?
Jasmine, we are not able to hear you.
Good evening, sir. My question, actually, you had mentioned something about the 20% growth. I missed out on that part, so could you please repeat it? Sorry for making you repeat it.
No, every quarter we intend to grow by 5 to 7%. So, at the end of the last quarter, we would have grown by 15 to 20%.
Okay, and this is on the top line?
Yes, this is under quantity.
Price is something basically we talk about quantity.
Okay, great. Thank you, sir.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Yes, sir. Hi. Thanks for the follow-up. So just one more question was, so you mentioned that you want to increase your capacity utilization by around 10 to 15 percentage points from where it is today. And you also mentioned to an earlier question that the margins will sustain. So are there no benefits of operating leverage, or do you expect things to sort of some pricing pressure, etc., to come back?
No, not that. Basically, I cannot say. I would love to work at 100% capacity utilization.
So we would like to increase our sales volume because that's more sustainable, and we are okay with the current margin levels.
Okay. Understood. That's it from my side. Thank you.
Thank you, Rohit.
Thank you. Ladies and gentlemen, we will take that as the last question of the day, and I now hand the conference over to the management for closing comments.
Thank you all the participants in this earning call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR managers at Velocem Advisors.
Thank you. On behalf of Fairchem Organics, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.